Good morning, everybody, and welcome to Wednesday, November the 15th. It is almost 6:30 in the morning, and we are getting ready for the PPI report.
So I'm sick of this stuff.
Yeah. You had, we'll stick here. We now have a November of 310.93 points. The bounce is now 404.89, 9.87%. And as of the current futures, we are looking at a gap up. So gap up at the moment is right around 15 points. So, yep, get ready for it once again.
So I'm sick of this stuff.
That's right. So looking here at the November number, all right, we'll stick with that. 310.93. Hide a column. That way we can get our monthly range. And here we go. September, 303 points. And come over on to, where was it? There it is. The big March, 302 points. Come on to, there you go, January, 299.88. 336 points in December. And if you remember, December was selling down. We went minus 20%. 381.96, the big November of last year, the big bounce coming off of that October bottom. That was 413 points for the month. 370.75, 535 points in September. So, the point in July, here you go, July, 418 points. The month finished up 9%. The point I'm trying to make for you guys here is you don't get this kind of volatility in a bull market. Bull markets are nice and peaceful. They incline relatively smoothly. And thus, the warnings that I had in June this year, same as last year or 2 years ago in November, as we were going into Thanksgiving, is buckle up, Buttercup, because what's coming is not gonna be nice. It's just the way that it is. And unfortunately, 90% of those that have bullish thesis are all in agreement now, and it ain't gonna be pretty. So ride this for all you like. Yeah, but it's coming and it's not gonna be nice. So futures, we are gapping up again and looking here just at the week to date, relatively smooth for the week. And then the fake CPI report. As of yesterday, a fake CPI report, which provided the Russell 2000 a 5.5% gain on the day. After, we'll go over that here in a second once I move my chart back to where I like it. Russell, all of that having gone minus 1% every day last week, nearly filling the fake gap that was created more than a week ago because they announced treasuries were going to issue a little bit less than what we issued prior from last quarter, but we're going to increase our issuing in the beginning of next quarter. Fed swap traders started pricing in no more rate cuts or no more rate hikes, and rate cuts will be coming. And this was the day after Jerome Powell just got done speaking at the FOMC meeting saying there are no rate cuts. Absolutely fucking not. And higher for longer has continued to be higher for longer. We had another gap. We filled that on the IWM. You'll see that on the SPX in a minute. And then yesterday with the CPI report, which was fake. John Wayne Bobbitt fake. And what you got there was, boom, the big spike to the upside. And I'll get over the fake part in a second because I am not ranting. I am actually, today was one of the happiest days I have had in months. And the reason being is I have all my seeds. All my seeds now are completely planted for me, for my hedge fund, and for my kids. I literally have nothing to worry about other than like hotel reservations for Thanksgiving. That's the biggest issue I have right now. 11.25% bounce over here on the IWM. So let's get over to here as we're going to scroll around a little bit. Where are we? Where are you? Where are you? Here you are. Futures, here we go. As again, flat. Coming up to the 2023 highs over here on the QQQ. Right up to it, right up to it. And again, flat all overnight over on the Russell 2000. Flat, flat, flat over on the SPY. ES is up 15. The NASDAQ is up 63 and 83. And I have no idea where it is. Okay, yeah, where are you? Up 60, 80, 90 points over on the Dow Jones. Put this back where I want it on my main screen. And here we go. So, IWM. 11.25%, all half of that being yesterday. Come over onto the VIX, and important here, today is Wednesday. Today is Wednesday, and the VIX fractionally touched below 14. You need to let that sink in. And not you're buying Twitter, but you need to let that sink in. You have Friday coming up here. Okay, Friday, the day after Thursday, which is the day after tomorrow. And when they crush the VIX on Fridays, it's going to be pretty damn hard to crush this VIX. So take a little bit of that into consideration as well when you decide to short-term any kind of trading. Your SPX, 404.89 points on the bounce, 9.87%, and we are coming right up to that April 21, 2002 high, 45.12.94. One gap, one primary gap is remaining, 45.76, 45.51. From the beginning of August, there is a tiny, I'm talking tiny, like 3-point gap from back here on July 31. And there is an unfilled gap from back in January of 2022. But I want to bring this into perspective because it used to be that the SPX was in charge, that the SPX was the gap filler. Primary is always SPX. It's not anymore. It's not at all. It has completely changed the dynamics of this because you now have 7, 8, 5 trillion-dollar companies that just know how to say one word, AI. And here is your QQQ with 0 gaps, 0. I repeat, 0. There are no gaps, none whatsoever, none. There are no gaps at all up above, 0. You want to go talk about going to the all-time highs and going higher? I implore you to do so. I hope that it works out for you. I wish you the greatest bit of luck. You are up 44 points, call it. Up roughly 13%, call it. Off of fake news, fake news, fake news. When I say fake news, we're talking about Fed fund swap traders pricing in no more hikes and rate cuts coming soon. And I can give you the phone number for Alan Greenspan, who can show you rate cuts are not good. They are not good for the economy, for the stock market, and for anybody who only knows how to buy calls. 44 points, 13%. Come here on to just the week to date. And here we were trolling very nicely and very perfectly at 375. And then you got your CPI report. And this is where you're interesting, okay? This 384.28 on the QQQ. You see something come down on that 384.28, you know you got something, but you need to break down into your gap. Your gap is at minus 383. Until you get to minus 383, all you're doing is day trading. So again, your IWM over there, your VIX, I don't know how you're going to crush the VIX come on Friday, but hey man, good luck crushing the VIX on Friday. Here is your SPX, bring you here onto the week to date 5 minute, and as you can see, nice and clean and everything was okay for the first day of the week. And then Tuesday with your CPI report not only gives you that, but look on a 5-day and here you are, and look on a 10-day and here you are. This is your first, this is your second, this is right here, bringing you back to your FOMC. So there's a lot of work to be done to the downside in the short term, which again is why whatever you ate last night or whatever you're eating this morning or whatever you plan to eat for lunch, I would like for you to look at it. Look at it and just pay attention to what it is that you have in your hands. If you're eating a sandwich, it has bread. That bread came from wheat. That wheat was a whole bunch of seeds that went into the ground, and over the course of time, they grew. Once they grew, they were able to be cultivated. If you have a slice of tomato in there, I implore you, take a seed, put it in a piece of potting soil, put it in a pot. Watch how long it takes for it to germinate. Watch how long it takes for it to actually grow. Watch how long it takes for you to actually get your first fruit. And yes, tomato is a fruit. It's not a vegetable. Do you have lettuce? Okay, you got lettuce. Now that's the day trader right there. Lettuce. Throw it in a styrofoam cup, put it in a little sponge, put it in some water. Boom, 15 days, you got a piece of lettuce. And all of this off of fake news that we're not complaining about. This is a gift. This is better than Santa Claus and you're 6 years old. For those that are Jewish, I'll tell you about Santa Claus one day. This is better than that. But you want a day trade. I'm sorry, but that ain't going to work right now. QQQ, 2.4% yesterday. And if you could possibly pay attention, a 3-point range. Intra-day, 3 points. So your CPI report, there it is, 3.2% versus the 3.3% that was expected. And the best possible way to explain it is from Nobody Special. See you in the chat room.
Good news, folks. Last month, your health insurance premiums went down by 34%. At least that's what you're supposed to believe according to the inflation statistics that were just released today by government bureaucrats who think you're stupid and expect you to believe that. What's up, guys? I'm Nobody Special, and this morning we got the October CPI, or the Consumer Price Index, from the Bureau of Labor Statistics, and the market was celebrating because inflation was only 3.2% year over year, and the market was expecting 3.3%, so the lower inflation report sent stocks flying. There's one problem. The entirety of that inflation beat was made up of a methodology change to the way we measure inflation in health insurance, and if you correct that number, inflation actually came in higher than the market was expecting. And here's the CPI report from the BLS this morning. The all items index increased 3.2%. That's the year over year change, and that's the number that everybody was celebrating. And as some very sharp eyes on FinTwit quickly noticed, there was one big outlier in that report in Table 2, where they give you a detailed breakdown of all the categories that make up the CPI. Right here above my head, health insurance premiums dropped 34%. And if you factor in the weighting of this category, health insurance accounts for 0.525% of the total index. The entire index was dragged down almost 0.2% just by this one category. And obviously anybody living on planet Earth, that is outside of Washington, D.C., knows this number is complete horse manure. Also worth pointing out that 0.525% number is also horse manure. How many people out there really only spend 0.5% of their income on health insurance premiums? And as always, folks, the answer lies in the fine print. There was a change to the health insurance methodology following recommendations from the National Academy of Tell Them What We Want You to Say or We'll Cut Your Funding. The Bureau of Labor Statistics is improving the methodology used to calculate retained earnings in the CPI Health Insurance Index. Under the pre-October 2023 methodology, retained earnings were updated annually without any smoothing of the data. Under the new method, the BLS will update retained earnings every 6 months using half-year data and will calculate on a 2-year moving average to smooth the changes in retained earnings. I don't know what any of this stuff means. All I know is they changed the way they measure things, and all of a sudden, voila, your health insurance drops 34%. That is not rain dripping down your back. Now let's see how that 34% decline in health insurance premiums in CPI measures up against some of the real-world data. For example, this headline in the Wall Street Journal from just a few weeks ago, health insurance costs are taking the biggest jumps in years. Employers and workers are expected to see an increase of about 6.5% or higher in health plan costs next year. Or how about this one in NPR from last month? For people who get healthcare coverage through their jobs, the cost is rising. Well, that must be a typographical error. Surely they meant to say the cost is falling 34%. Or maybe this one from U.S. News and World Report. U.S. health insurance premiums rise 7%. Nearly $24,000 for family coverage. So besides the fact that the 7% increase in your health insurance premiums is turned into a 34% decrease in CPI, remember the weighting of the CPI index of 0.5%. That $24,000 for family coverage represents apparently just 0.5% of your income. Congratulations, you guys are doing great. So I feel like a congratulations is in order to our government benefactors after decades of nauseating speeches about bringing down the cost of healthcare. Apparently they've finally done it. 34% lower. All we had to do is change math. Also important to remember that the stock market rallied on this news today. The S&P 500 gapped up almost 2% at the open in another totally organic price move for stocks based on manipulated government statistics. Remember, if it wasn't for that 34% reduction in health insurance premiums, then the CPI would have come in at 3.4% today, 1 point above the 3.3% the market was expecting. And so this rally in the charts would look a little bit more like there, I fixed it. So now that healthcare has finally become affordable, and now that inflation is totally defeated and everybody's lives are getting better, I guess we can look forward to an end to the videos of girls in their cars complaining about how they can't afford life anymore because the government bureaucrats say, girls, you're wrong. Your life is better. Think I'm kidding? Just ask former Fed economist Claudia Sahm, who says the vast majority of Americans are better off financially. Full stop. Till next time, live small and dream big.